Don't watch the market closely. Buy a stock and hold for the long term. Dividends will take care of the rest. Warren Buffett. This timeless piece of wisdom stands true in this fast-paced world of financial markets where daily fluctuations can leave even the most seasoned investors on edge. In this video, we'll show you and John how to earn $100 a day. We'll show you 6 stocks, each with 2 strategies, one for those who already have investment capital and one for those who have the time to grow their investments. We'll show you how much you need to invest at the beginning to achieve our goal, or how long you have to wait to reach the $100 a day goal. In the end, we'll show you a stock that doesn't need a massive investment at the start, nor does it require time to grow. Let's start with our 2 strategies. As we mentioned, for this video, our first strategy is for those who have an upfront investment or retirement funds. Our second strategy is for those who have a small investment but have the time to let it grow and reach the goal of paying $100 per day, or $3,000 every month. So it's up to you to choose which strategy you want to follow, either a faster but bigger initial investment or a slower but smaller initial investment to reach the same goal. Ideally, your choice depends on how much money you have and how patient you can be. Next up are the stocks sorted based on the time it takes to grow your investment to a level that pays a dividend of $100 per day. Starting at number 6, we have Visa. Known by the ticker symbol V, Visa is a leading global payments technology company. Currently, the company has a dividend yield of 0.77%, which means to get to $100 a day or $3,000 per month, John has to invest over $4 million in this stock. Straight away, it's obvious that strategy 1 isn't good at all. But that's because this stock is not about the current dividend yield. This stock is all about dividend growth, or in other words, CAGR, which in this stock's case is 18.49%. Which brings us to strategy number 2. For this strategy, John needs to invest $10,000 and wait for his investment to grow while reinvesting his dividends. After 5 years, his investment will slowly grow to $10,649. In 10 years, it'll be at $12,366. Give it 10 more years, and in 20 years, it'll be worth $39,011. And that's where the 18.49% CAGR comes into effect. In just 3.5 years from there, it will almost quadruple the value to $147,901, paying an annual dividend of $41,344. That's $3,445 per month or $115 per day. Total time to reach our $100 a day goal with strategy number 2? 23.5 years. Visa operates VisaNet, a transaction processing network offering credit, debit, and prepaid card products alongside various innovative payment solutions. Visa's financial performance has been very impressive over the years, with a consistent increase in revenues and earnings per share. Sales have nearly tripled in the past decade, with analysts projecting an approximately 11% annual growth rate in coming years. While Visa's valuation may appear relatively high, its track record of overachievement in earnings expectations alongside its continued growth justifies this. The company's consistent ability to exceed market projections stamps its authority in the investing world. Next on the list is Abbott Laboratories. Known by the ticker symbol ABT, Abbott Laboratories is a prominent member of the Dividend Aristocrats, an elite group of stocks with an impressive record of increasing dividends for over 25 years. Currently, this stock pays a yearly dividend of 2.11%. So for strategy 1, if you want to earn $100 per day straight from the first year, you have to invest $1.7 million in this stock. Now, these numbers are high, but wait till the end, where we show you stocks that can get you $100 per day easily with low investment in strategy 1 and less time in strategy 2. Back to our stock. For strategy 2, the stock has a 10-year CAGR of 13.8%. So if John invests $10,000 in this stock and reinvests his dividends, In 5 years, his investment will grow to $11,649. In 10 years, that figure will be $15,647. That's when the compounding growth takes charge. Give it 11 and a half more years, and after 21 and a half years, John's initial investment will be valued at $139,775, paying an annual dividend of $36,738, which equates to $3,051 per month or $102 per day. Abbott Laboratories engages in 4 primary segments: nutritional products, established pharmaceuticals, diagnostics, and medical devices. The company benefits from 2 significant growth drivers: an aging global population and expansion in emerging markets, particularly in the branded generic pharmaceuticals sector. These factors add up to make it one of the most stable stocks in the market. To top it off, the company has a remarkable competitive advantage. Notable consumer medical products like ensure strong sales, even during economic downturns. Their dedication to research and development signifies their commitment to long-term growth. Remarkably, Abbott grew its earnings during the 2007 to 2009 financial crisis, demonstrating its recession-resistant nature. At number 4, we have 3M Company. Known by the ticker symbol MMM, this stock hits a sweet spot in current dividend and dividend growth. It has a current dividend yield of 6.93% and a 10-year compounded dividend growth rate of 9.15%. So, for Strategy 1, if John aims to earn $100 per day right from the first year, he'd need to invest $519,481 in this stock. Though significantly lower than the last stock, it's still on the somewhat higher side. For Strategy 2, this stock has a 10-year compound annual growth rate of 9.15%. So if John invests $10,000 in this stock and reinvests his dividends, his investment in 5 years will grow to $15,529. In 10 years, that figure will double to $30,853. We see the compounding effect more apparent here thanks to a good starting current dividend yield backed by a strong CAGR. To reach the goal of $100 per day, John needs to let his investment grow for 17 years in this stock, after which his investment will be valued at $155,551.41, paying an annual dividend of $40,796. That's $3,399 per month or $113 per day. 3M has a rich history dating back over a century. It's a diversified global manufacturer with a presence in around 200 countries. The company operates through 4 divisions, including safety and industrial, healthcare, transportation and electronics, and consumer. Their diverse product catalog of over 60,000 items covers various sectors, making 3M a key player in the industrial manufacturing industry. 3M's exceptional competitive advantages lie in its technological prowess and intellectual property, which have helped the company secure over 100,000 patents. Despite recent challenges, including supply chain disruptions and the impact of the pandemic, 3M has a solid track record of dividend increases. In fact, it's a member of the elite group known as Dividend Kings, having raised its dividend for over 60 consecutive years. At number 3, we have ABBV. Known by the ticker symbol ABBV, this corporation is a pharmaceutical giant with a 51-year history of consecutive dividend growth, making it also one of the coveted Dividend Kings. It has a current dividend yield of 4.05% with a solid compounded annual growth rate of 13.98%. For Strategy 1, to earn $100 a day from this stock, John needs to invest around $888,889. This will give him an annual dividend of $36,000 from the first year, equating to $3,000 per month or $100 per day. Now, if John uses Strategy 2, with a $10,000 investment reinvesting his dividends, in 5 years his investment will be valued at $13,408. In 10 years, that investment will almost double to $23,701. Wait another 6.5 years, and in 16.5 years, John's investment will be valued at $135,914.95, paying an annual dividend of $38,671. That's $3,222 per month or $107 per day. Time to reach the target? 16.5 years. You can see how a strong CAGR can boost even a moderate current dividend yield to grow and pay higher in years to come. Imagine what a stock can achieve with both high dividend yield and high CAGR. We'll show you a stock that ticks all those boxes coming up at the end of this video. ABBV stock has been one of the most consistent when it comes to growth. They've grown their dividends by nearly 300% since its spin-off from Abbott Labs in 2013. ABBV maintains a good profit-sharing ratio with its shareholders, and its free cash flow comfortably covers dividends, promising a strong foundation for continued dividend growth of 10 to 15% annually. This year marked a significant transition year for ABBV as it faced competition for its major revenue contributor, Humira. While Humira's sales declined, the company's new product lineup showed substantial growth, and they're expected to replace Humira's revenue in the long term. ABBV is also well prepared with a robust pipeline, including over 90 indications under development, securing its future beyond 2024. All in all, the stock's combination of a healthy dividend yield, strong growth prospects, and sound financials make it an attractive choice for long-term dividend investors, provided a margin of safety is considered before adding to one's position. Next up, we have Altria. Known by the ticker symbol MO, Altria Group Incorporated is a stalwart in the tobacco industry. With a track record of 54 consecutive years of dividend increases, Altria is also a member of the Dividend Kings. Currently, the stock has an annual dividend yield of 9.18%. The starting dividend yield is good, but the stock also comes with a strong 10-year CAGR of 7.76%. So if John wants to earn $100 a day from the first year with Strategy 1, he has to invest $392,157 in this stock, which will end up paying an annual dividend of $36,000, $3,000 monthly, or $100 per day. Now, if John chooses the second strategy and invests $10,000 with dividend reinvestment, after 5 years, his investment will be valued at $17,507. In 10 years, it will double to $39,666. And in 15.5 years from the initial investment, the reinvested dividend will be valued at $142,331, paying an annual dividend of $37,608. That's $3,134 per month or $104 per day. What makes Altria a standout dividend stock is its ability to offset the declining demand for traditional tobacco products, adapting to changing consumer preferences. While cigarette shipment volumes have decreased nearly half since 2000, Altria has successfully leveraged its pricing power and brand strength to maintain sales and cash flow growth. The model continues to prove effective, driven by low production costs, high margins, and unwavering brand loyalty. In addition to its growth prospects, Altria's stock is considered undervalued. This combination of robust dividend yields, potential for price appreciation, and consistent profitability positions Altria as a compelling choice for income-seeking investors. And lastly, our top pick for this video is Arbor Realty Trust. Known by the ticker symbol ABR, this REIT has been one of the top 10 real estate investment trusts for its attractive valuation and strong dividend metrics. Speaking of which, it has a current dividend yield of 12.29%, and backing its strong dividend yield is an even stronger dividend growth rate of 13.14%. Okay, now before showing how much John needs to invest in Strategy 1 and how long he has to wait with Strategy 2 to achieve his goal of $100 per day, let's see why this investment makes it to the top of the list. First of all, the high yield is a standout characteristic of ABR, as it significantly surpasses the average yield by quite a margin. Secondly, as a REIT, ABR is required to distribute at least 90% of its taxable income as dividends to shareholders, making it an appealing choice for dividend investors. Arbor Realty Trust's business model revolves around three primary platforms: balance sheet loan origination, GSE agency loan origination, and servicing, providing diversified and recurring income streams. The company's versatile multifamily-centric operating platform and involvement in various real estate lending categories, including senior housing, bridge financing, and mezzanine equity, contribute to its strength. Now, back to running the numbers. With a current dividend yield of 12.29% and 10-year CAGR of 13.14%, based on these metrics, for Strategy 1, John needs to invest only $292,921 in this REIT. And with Strategy number 2, with John's $10,000 initial investment and reinvestment dividends, after 5 years, his investment will more than double to $23,586. Give it 5 more years, and in 10 years from now, John's initial investment will be valued at $115,357, paying an annual dividend of $39,891. That's $3,324 per month, or $110 per day. In this video, we discussed strategies to make $100 per day with dividends. But you may want to pursue all your options in the passive income world. For this, watch our video on Top 5 Passive Income Cash Flow Assets for 2023, where we show you Robert Kiyosaki's key strategies to succeed.